Yeah, you know, TKO manages close to 52 billion euro of assets across private and public strategies, public market, liquid strategies as well. And across the board, what we do is very similar. We go deep into the fundamental analysis of the companies we invest in. We go very specific on all the topic that matters for the industry or for the issuer. And we go for quality names. That's very much what we do. We invest over the long run in companies we love, we know inside out, and that we spend a lot of time studying before we invest. So that's true in private markets, in private equity, in private debt, in real assets, but it's also very true in liquid strategies, such as listed equities or fixed income high yield. Yeah, the Spanish market is obviously very important, growingly important. You know that the Spanish economy has been outperforming the broader European economy for several years now. We're expecting this to continue. And that's also why we invest heavily in the Spanish market. We have more than 2 billion euro of assets deployed in Spain. It is, once again, a fast-growing economy. It is also a very fragmented economy in many ways. In private equity, in private debt, in real assets, you do find great opportunities of growth where capital is needed, and this is where we intervene. We come with capital to help entrepreneurs and smaller companies grow and become national and international champions. So very much a great way for us to invest over the long run in Spain since 2017. First observation here, it's a pretty good time to be invested now. When you look at the broader picture, you have growing economies, you have fiscal and monetary stimulus being implemented around the world and trickling down into earnings, profit generation for companies across the globe. So it is, broadly speaking, a very good time to be invested. But it's true that it's also a very dislocated market. We have a lot of dispersion. We have winners, losers, high-flying assets and assets which are not being liked, very expensive stuff and less expensive areas. And it's a good time to do name selection, to be very picky in what you do. We saw that last year in terms of performance. Active investors willing to do the work and invest properly in the right corners of the market did outperform by a lot, and we are expecting the same feature for 2026. So when you think technology, when you think industrials, when you think cyclicals, there are a lot of dispersion across those various sectors, and so name selection will be a driver of performance in 2026. Yes, so we believe the European sovereignty theme is probably a long-term mega trend for the market, for investors. It's probably the very beginning of that mega trend. We are witnessing today the strong realization coming from European government that we need to reinforce in Europe our resilience, our autonomy. We need to relearn some know-how. We need to reincorporate some value chains because we are too dependent on the outside world today, and we need to reinforce our autonomy. So we are seeing a lot of capital being deployed in defense, in the industry, in infrastructure, in technology, in pharma, a lot of that being deployed over the long run and favoring national and European champions. So we feel this is a pretty good time to invest in this mega trend, probably the very beginning. We saw what it can create in terms of performance looking at defense. Defense was probably the first sector to benefit from that mega trend. But once again, we think this goes much beyond defense to more autonomy, thematic industries, such as the one I just mentioned. We've been doing that at TKO for many years now. We manage the largest cybersecurity fund in private equity. We're going through our second vintage of an aerospace and defense fund as well. We manage more than 2 billion of assets in defense, more than 30 investment professionals dedicated to that space. So this European sovereignty theme is core for us when it comes to investing in Europe. And so we declined that into a new thematic listed equity fund launched in 2023. And in our view, a good way for investors to bet on the European renaissance, European recovery over the long run. Yeah, so everybody's talking about defense, and rightfully so. We see a lot of capital being deployed in defense, a lot of public spending in defense, and we saw what it creates in terms of performance for investors. But our belief is that this goes much beyond defense. That's what's happening in defense today could very much happen in technology tomorrow. What if we lose access to some chips? What if Taiwan being invaded? What if, we lose access to some specific technologies on the cloud or AI? Or what happens to infrastructure? We know infra is also a sovereignty theme. What happened to pharma? We know we are very dependent on sourcing outside of Europe to produce our drugs in Europe. So a lot of those themes resonate with the same background, which is sovereignty, autonomy. And so we believe that it's a good time to get positioned now. Today it's defense, but tomorrow we'll see what happens to those other industries. And that's a theme which is much broader than uniquely the defense sector. Yeah, this is a new feature of the post-COVID world in the markets. We now have elevated yield for fixed income, elevated yield for credit strategies, and that's a very interesting time for credit investors now. We have strong fundamentals. We mentioned that there is economic recovery, there is economic growth, leverage is actually close to long-term averages. Companies in Europe are in good shape. We also have strong technical factors. We see a lot of inflows in the asset class. This is providing a support for the asset class in terms of performance. And at the end of the day, today, you can produce in your portfolio some income generation strategy, low volatility strategy as a bedrock for your portfolio that is very attractive for long-term investors in our view. And so in our conversation with clients, we see increasingly clients willing to put cash to work, trying to get some returns out of this. And among the ways you can put cash to work, there is this Tikehau short duration fund indeed. This is providing a low volatility, low risk kind of exposure to the credit space in Europe in a very short duration kind of framework with investing in bonds which are about to mature within the next few months or years. And by doing so, you can put cash to work, get some extra yield out of it while maintaining a low volatility exposure to the fixed income space. So very much a product in demand that resonates in the higher yield kind of universe.